Dr. Swagel, when the Budget Committee wants to know how much a bill costs or saves, it's supposed to ask the Congressional Budget Committee in order to move the bill forward. Has CBO analyzed the effects of the White House on Social Security finances?
No, Senator, we have not.
Also for you, Dr. Swagel, when it comes to Social Security, the only way to determine if someone is paying their fair share is to look at both the taxes they pay and the benefits they receive in return. How much in benefits are the highest earning workers scheduled to receive for every dollar in taxes they pay? And contrary-wise, how does that compare to lower earners?
Okay, no, thank you. And we've analyzed that. So I'll talk about that for the different household incomes. So for the lowest quintile, so the lowest 20%, people with the lowest incomes over their lifetime have about a 2.5 to 1 ratio of their lifetime benefits against their lifetime taxes. So 2.5 times their benefits to taxes. The middle 20%, that ratio is about 1.5 to 1. The people with the top 20% of lifetime incomes, it's about 1 to 1, which means that's on average for the top 20%. Someone at the very top, the top 1%, like we saw in one of the charts, they would have a ratio of less than 1. So their lifetime benefits would be less than their lifetime contributions.
Dr. Biggs, some Democrat proposals would give extra benefits to wealthy people who don't use them or need them, and then ask future workers to pay up to pick up that tab. Do you think that these proposals are well targeted or fair to younger generations?
When we think about fairness, we want to think not just within generations, but across generations. Proposals that would increase benefits for current retirees, in particular for middle and higher income retirees, would grant benefits to retirees that they had not paid for themselves over the course of their careers. In other words, it would give benefits they had not earned. Of course, the bill has to be paid, which means that taxes on younger generations have to be higher to finance that. So generationally, that is inequitable, in particular because younger generations get a poorer deal from Social Security than older workers in the first place.
Okay. And Dr. Swagel, changes affecting Social Security can have unintended consequences for the rest of the federal budget. How would higher payroll taxes or new investment taxes dedicated to Social Security Trust Fund impact on budget revenues?
Okay, and our analysis of any Social Security program would look at those effects. So higher payroll taxes, for example, would mean lower take-home pay for workers, and that would affect workers' work effort, the labor supply. That in turn would affect the amount of income in the economy, and then the income generated by income taxes and payroll taxes. So that would affect the overall economy. There'd be many other effects, so we could do a full dynamic analysis. One other possible way that changes in taxes could affect the non-Social Security part of the budget would be if there's a transfer of revenue. So say there's a tax stream that now is going into general revenue. If that is, in some sense, moved into a trust fund instead, that would affect the overall budget as well. Or that would affect the non-Social Security part of the budget.
Hello, friends. It is going to happen. Social Security cuts are on the negotiating table. An increasing number of Americans are now working past 75 years old as Social Security's future dims. But experts have revealed the top things that you need to know about the current Social Security reform proposals that have been pushed by Democrats. My dear friends, please do me a big favor and watch until the end of this video for more details. Also, if you would like to enter the weekly giveaways, please make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning the giveaways. American politicians are not the only ones working well into their 70s and beyond. Increasingly, people much older than the traditional retirement age of 65 are forgoing days on the golf course or volunteering at the bake sales, and instead staying in the office. The Bureau of Labor Statistics in 2021 published figures showing the number of people in the labor force who are 75 years old grew 53.7% from 2010 to 2020. That number is projected to grow 96.5% between 2020 and 2030. The truth is that many seniors do not have the retirement savings that they thought they would have. That's especially the case for those who did not have jobs with defined benefit pensions or 401k matching programs. In fact, only 35% of Americans between the ages of 55 and 64 have a pension or retirement savings held in a 401k or IRA. This number will likely increase if action is not taken to address Social Security. Proposed Social Security cuts come in many forms, some of which are disguised as no cuts at all, but amount to the same thing. That is the case with proposals to raise a full retirement age for collecting benefits, which has the backing of more than 170 members of Congress. A group of Republican lawmakers aim to balance the federal budget and slash government spending by targeting programs like Medicare and Social Security. In June, the 176-member House Republican Study Committee approved a fiscal blueprint that would gradually increase the full retirement age to 69 years old for seniors who turn 62 in 2033. The current full retirement age is 66 years old or 67, depending on your birth year. For all Americans born in 1960 or later, the full retirement age is 67. Other lawmakers have proposed more straightforward cuts to Social Security by slashing benefits across the board. These and other programs aim to reform the program before the Old Age and Survivors Insurance Trust Fund runs out of money, which could happen within the next decade. And when it does, Social Security will be solely reliant on payroll taxes for the funding, and those taxes only cover about 77% of current benefits. Federal Reserve Chair Jerome Powell delivered his highly anticipated speech on the central bank's outlook in Jackson Hole, Wyoming, and he signaled relief could be soon coming for consumers. Following a series of interest rate hikes since March 2022, most recently a 25 basis point hike in July, following a June pause, all eyes were on Powell to see if those hikes will continue at the next Federal Open Market Committee meeting in September. Jerome Powell did not give any certainty as to what the Fed's next move will be. He did note that with inflation continuing to inch closer to the central bank's 2% target rate, the Federal Open Market Committee will carefully consider whether it might be time to pause hikes again next month. The unemployment rate has offered another promising sign for the Fed in its inflation fight. Monthly job openings have declined as well, which is based on the data from June. The Fed needs to see the labor market cooling off, because if there are too many jobs and too few people, wages will increase and put an upward pressure on prices. While a pause on interest rate hikes could be in the cards in September, nothing is certain, and some Democratic lawmakers have frequently warned Powell against continuing to raise rates due to the potential consequences it could have on the economy and Americans. Senator Elizabeth Warren told Insider that the Fed resuming its aggressive rate hike campaign could be devastating for our economy and disproportionately harm marginalized communities. Warren also added that Powell must maintain the Fed's pause on rate hikes and avoid further rate increases that threaten our economy and risk throwing Americans out of work. Well, my magnificent and most marvelous friends, that is the end of my daily stimulus update video for this Sunday. My dear friends, thank you so much for being part of this community. I greatly appreciate all of you for being here every day To say thank you, I will be announcing several winners every Friday for the Walmart gift card giveaway. My dearest friends, please make sure that you enter the giveaways by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed day.